here today, so I'm going to begin. Today, we're going to talk about money. That's a good topic, isn't it? Especially in this time. And we're going to talk about actually how to raise money and find investors and capital in challenging times. It's LeAnn Riley here. So welcome to my real estate investing club. And I have Dave DuBeau here from Canada. And he's an expert at finding money. So today we're going to talk about that. And actually, once a month, I have a live stream with expert speakers and leaders in real estate investing, like Dave. And what's really cool is you can ask questions and participate from anywhere. And that's the neat thing maybe about COVID, is that we've all gotten pretty tech savvy, haven't we? Yep, you're right there in your office. So first, I'll tell you who I am. I'm a broker and a real estate coach, and I lead the Encore investment team of realtors in the Twin Cities here in Minnesota. And I built a multi-million-dollar portfolio in residential, multifamily, condo development, commercial, and vacation properties. And today I'm a national coach and trainer, and I help ambitious people build wealth as real estate investors. And I have something called the proven profit formula. So it really matches up with the money partner formula. That's why I found Dave. And I provide free education, as does Dave, with a podcast. And so I'm really glad you're here today with us. And I'm going to introduce Dave here. He's a real estate entrepreneur. He's a best-selling author and a highly sought-after trainer, speaker, and consultant. So we're lucky to have him today. And Dave, you said that now is the ideal time to line up investor partners. And, you said because COVID is going to create amazing opportunities for capital-ready real estate entrepreneurs who are prepared. And that's why we're here today. How do you get prepared to take advantage of deals that might be coming down the pike?
Yeah, good question. Yeah, exactly.
I have a question about that because, what do you see? Canadian real estate is a little bit different than here in the US. What do you see? Do you think a big foreclosure wave's coming, or what do you see?
Oh, LeAnn, we got a lot more similarities than differences. Basically same components. We got dirt, we got sticks, cement, plumbing supplies, tenants, and toilets. That's the same here. That's the same in the States. Supply and demand, all that kind of good stuff. I think in a lot of ways in the States, you have a huge advantage over us Canadians because, especially depending on where you are, property prices are still very, very reasonable. I mean, property prices in a good chunk of Canada are ridiculous, to be perfectly frank. And I think I was just seeing recently that the median house price in Canada is somewhere around $400,000. So it's a pretty high priced market all across the place. So, and I look with a little bit of envy at some of the people that I interview, like yourself on my podcast, who are getting into properties for $70,000, $80,000, $100,000, that kind of thing. It's like, my goodness, we need that for a down payment for the kind of properties we're buying here. And the cash flow, it's not like we're charging exponentially more rent or anything like that. So what's my crystal ball about what's going to happen through COVID? You know what? I figured out early on, my crystal ball sucks. Yeah, it really does. When this whole COVID thing first hit, I was predicting there was going to be massive foreclosures, going to be massive challenges with the market, the prices were going to tank, all that kind of stuff. The exact opposite has happened up here, at least. And a lot of that has to do with the fact that the government is basically bailing everybody out. Now, how long that can go on for is up for a lot of speculation, because basically they're just printing money to make this happen. So that's going to catch up with us sooner or later. But in the meantime, we haven't seen anywhere near the kind of foreclosures or things like that because of the government, kind of acting as that safety net for people. So that can only go on so far, for so long. there's going to be a lot of fallout. We're going into our second wave of COVID. Things are closing down again. So eventually we're going to hit the end of the rope there with how far we can bail people out. And that's when people are going to start losing their homes and coming into challenges. We're already seeing it in the commercial sector. We're seeing a lot of businesses, brick and mortar businesses go out of business, especially restaurants and whatnot, bars, restaurants, places that, get shut down for extended periods. But I won't claim to have a crystal clear vision of exactly what's going to happen. The only thing I will claim is no matter what happens, there's going to be tons of opportunities out there. And the way we can take advantage of these opportunities, LeAnn, as you know, is to go in prepared with capital in hand. So in other words, you and I have always heard this, just find a good deal and the money will find you.
Yeah.
Well, I call BS on that one. And what I say instead is, when it comes to the money and the deal, whenever possible, the money comes first. Have the money in hand, have access to the capital, have access to those investor partners, and then go find the deals. Because here's what you can do. You can negotiate a lot harder from a position of strength because you've got the capital to back you up. So if people come away with one thing from our chat today, it should be this focus. Let's focus on getting our ducks in a row. Let's focus on getting our investor partners, our money partners lined up, ready to go in the wings so we can go out and we can find these deals and we can close on them quickly.
I so agree with you on that and you can take that right down to the basics of even a beginning realtor would say, first they have to get pre-approved. First, we need to know there is some money, but once you get past being a beginner and you're more sophisticated investor or into commercial, yeah, the money is always first. Besides, you can structure the deal differently if you know how the money is coming together. What you're paying for it matters.
Yeah, exactly.
So I think that's what attracted me to you, Dave, is like, okay, this is such a big question. I've been running this real estate club for over 10 years, and that's always been the question. Where do I get the money? How do I find a partner? So that's what's exciting about your formula is you've got some tips. And it's not what we used to think. We used to think, well, you've heard it, go to the network meetings, chum up to them, and then, you'll find a partner. It doesn't happen like that. It can, but it's rare, right?
Well, especially for beginners, right? Especially if you're just kind of getting started in real estate. So my sweet spot for the folks that I can really help out are people that I call mom and pop real estate investors, people that have got a deal or two or three under their belt. They've self-financed their first few properties. They've run out of cash. They've run out of credit to buy more. They're in that 80% of real estate investors who only own 20% of the properties. They want to get up into that top 20%. And the way to do that is by accessing other people's money. But here's the challenge. And LeAnn, sometimes you and I have to remember that a lot of people that are learning from us, real estate is not their full-time gig. Real estate is something they're doing on the side. They're doing that to build up a portfolio, build up cash flow, augment their retirement, create their own retirement fund, so to speak. But they're busy with life, with work, with family. They don't have a ton of time to go out and network and schmooze. They don't have a ton of time. They don't have the experience and how to get on the phone and start dialing for dollars. And quite frankly, who would want to?
Yeah. I don't know anybody who likes that.
I don't. Yeah, even the ones that are good at it don't like it, right? So, what's the solution? How can mom and pop real estate entrepreneurs start raising capital to grow their portfolios? And there's some basic things that we can do, and that's what we're going to talk about here today with this money partner formula, because that's what it's all about, right? It's how do we create something that's systematic, that's a way to kind of set and forget things. And here's the big thing. What can we do to actually get effective investors reaching out to us instead of us chasing after them?
See, I love that because that's how I operate my business and my life, on the law of attraction versus the hustle, hustle, hustle. And I can see that you do too.
Exactly.
So I really am interested in that. How do we attract? So why don't you give us a little bit of a, what the heck is this money formula? How can it work for me?
Yeah. Well, it's a pretty simple formula, LeAnn. However, there are quite a few moving parts. So what I can give you guys here is I can give you the big picture, 30,000 foot overview. If you're interested in getting more detailed information, I'll tell you how you can get a free copy of my book, which will go much more into depth in depth in that. But let's just kind of go over the big picture of how this. Let's see if we can see this money partner formula works, because I got the thing in the back, but
yeah, that's a little better. Yep, go.
well, let's just talk about it. So step number one, if you're taking notes, step number one is let's create a list of prospective investors. Let's create a list of prospective investors. Because here's the reality, LeAnn. In order for somebody to invest with you, they need to know you, they need to like you, and they need to trust you. Right? Yep. Does that make sense? If we're trying to get somebody to invest 50, 75, with $100,000 with us, those criteria need to be met. Now, one of the big challenges I see with newbie capital raisers is they think anybody with a pulse and a checkbook could be a good investor. And nothing is further from the truth, right? So a lot of people just kind of storm out there and they start putting stuff up on Facebook and they start doing silly things and trying to reach out to the general public. And some big legal potential challenges with that, especially with your American followers with the Securities and Exchange Commission. That's basically illegal. Quick caveat here. I'm not a lawyer. I'm not an accountant. I'm not a Securities and Exchange specialist. I'm just sharing my understanding with you, right? So what we want to do instead is we want to create a target group of prospective investors, people that we already know. We already have that relationship with. We have what I call a pre-existing relationship with them, right? So and this really is the lowest hanging fruit. So who are these people? These are people that you know and who know you. So friends, family members, co-workers, people from your church, people from associations that you belong to. You know, if you bumped into this person on the street, they would know you, you would know them, you could have a nice conversation. That's kind of the criteria. So here's the shortcut, then. Let's come up with 200 of them, and then let's focus all of our efforts on that group of 200 people. That's our target market of prospective investors. Now, does that mean there's going to be 200 people in there that are all going to be ready, willing, and able to invest with you? Of course not. But you don't need 200. Chances are, to do whatever it is you want to be doing over the next 12 to 18 months, you probably only need 3, 4, maybe 5 investor partners to really get things rolling. So we're going to focus on this.
So these 200 you're telling me are probably people I already know.
Correct. And when I explain this to a live group, I always get people kind of giving me a deer in the headlights look, and they go, "Dave, I don't know 200 people." And I always suggest, yeah, you do. If you want a quick little shortcut, start with all your contacts in your phone, right?
Yeah.
You want to figure that out, just go to all your contacts, scroll to the bottom, see how many there are. Chances are there's more than 200. Start there, export them all, get them into an Excel spreadsheet. Same thing with your email contacts, same thing with your social media contacts. Get them all out of there, get them into an Excel spreadsheet, and then whittle it down to 200 people. That's much easier than trying to think up 200 people. So there's
I like that. Yeah.
So that's kind of the first part of the process, LeAnn, is to have this target group of 200 people. Now, very important, you guys. We don't want to rush out like a bull in a china shop and say, "Hey, it's Dave. I'm looking for some cash for a deal. Have you got any?" All right. It doesn't go over very well. And the reason I know it doesn't go over very well, LeAnn, is because that's exactly what I did back in the day when I first started trying to raise capital, and I fell flat fast and hard. All right. So I don't want anybody else to make that mistake. What you want to do instead is you want to reconnect with those people on a personal level first before you start talking business, before we start talking real estate, before we start talking about investing with us, right? Let's have a genuine reconnection with those 200 people, and then we can set the stage and get off on the right foot. Does that make sense?
Totally. Yeah, especially we are not talking $20 here. We are talking a large sum of money and a huge amount of trust.
Yes.
So you're right. You don't do that in a phone call.
No, you don't. You don't. So, and you don't want to start. Here's the challenge, right? When you do that dialing for dollars thing and that networking and that schmoozing thing, there are some people that can do that well and they can do it effectively. I'm not one of them. But here's the big challenge. It's all about positioning, right? If somebody calls you up out of the blue over the phone, hitting you up for money, what do they come across as?
Desperate.
Desperate. They come across like a telemarketer, right? Who likes getting calls from telemarketers?
Nobody.
Pretty much nobody. My mother used to like getting those calls because, she was elderly and she liked the company from time to time. But most people are not into getting telemarketer calls. And same thing with your prospective investors. So let's do something different instead. Let's reconnect with them on a personal level. And when we're doing this with our students and our clients, we show them how to do a simple 3-step email campaign. 3 emails that go out over about a week to 10-day period, all about just making that reconnection. So I call that kind of like the Christmas letter from Aunt Nadine. I don't know if back in the day you remember that, but my aunt used to write a Christmas letter every year, photocopy it, get it put in with all of her Christmas cards, send that out to everybody. And we used to enjoy that, but it'd be a good way to catch up.
Sure.
That was back in the day before social media and when long distance phone calls were like $3, $4 a minute. So nobody called unless it was life or death, right? So that was how we kept up. So we're going to do a modern version of that, catch people up on what you've been up to, the family, the kids, the grandkids, whatever. Not trying to be salesy about real estate. It's just a real, genuine reconnection. And then ask them, hey, at the end of it, say, well, that's what I've been up to. How about you? Hit reply. Let me know how you're doing. I'd love to catch up. So that's what you want to do, just to kind of break the ice, get things started on the right foot. Then we have what's called a transition message. It kind of gives people the heads up that we're going to switch gears and start talking business after that. So all of that is step number 1 of this 5-step process, which is creating that target group of prospective investors and breaking the ice with them.
Okay, cool. Okay, so now we broke the ice, and now out of 200, 10 of them are talking to us, let's say, or asked me more questions.
Yeah.
Is that about the odds?
Well, here's the thing. Chances are you're going to get a lot more than that if you do it right. So typically, if you had 200, you should probably be getting somewhere in the 25 to 50 people getting back to you range.
Okay, cool.
And what we got to be prepared for is if you do that transition message properly, some of those people might actually say, hey, LeAnn, tell me a little bit more about this real estate investing thing that you're doing. So that's the next step. If that happens, doesn't happen all the time, but if it happens, we want to be prepared with an effective presentation, something we can show people. Now, this is especially important now, folks, because chances are they aren't going to necessarily want to or feel comfortable meeting you face to face at a coffee shop or something like that. So again, this is where this whole technology thing comes into play. So you're probably going to meet with them on Zoom. So what I always suggest, LeAnn, is that you have a really good slideshow presentation, a PowerPoint or a keynote presentation, a slide deck that you can take people through that really gives them the overview of what you're up to with real estate investing, what your strategy is, what your market focus is. And then if you've got it, maybe a case study or two, and really what's in it for them if they were to come on board as an investor partner with you. So you got to have a well-structured, well thought out, well put together slideshow presentation.
Right. So I really want to comment right there because Dave, you are spot on with that, because I have had so many people even so much as show up at my meeting and blurp it out at me. And you're like, well, A, it's the inappropriate place because I'm trying to run a meeting. I can't even hear what you're talking about. But B, there's no presentation or backup to go with whatever it is they're trying to talk about. And it's completely unprofessional. And if I'm going to put $50,000, $100,000 somewhere, I have to feel that right from the get-go. So I love that. And I know that this is where people get stuck, because I have lots of people, they need someone. And from what I understand about you, you have a done for you, like you'll help them through that.
Yeah. That's so really what I've got, Leanne, is I've got a boutique marketing agency, and we do one thing only. We do it better than anybody else in the world. And that is we help people implement my 5-step money partner formula. So it's not about just teaching people how to do it. We actually help them get it done. So,
but also what's unique about you, and I think you're going to tell us this before we're done today, folks, you give a full day seminar where you like spill the beans, right? And you tell, for those of you who are do-it-yourselfers who think you want to do this by yourself, because a lot of people who are beginning real estate investors, they just are stuck on the do-it-yourself model. And they'll listen to 30 YouTube videos and then try to do it. And it's so hard that way. That's what I can say, someone who's been there and done it. It's sometimes better to just pay the money and get someone to help you. That's what us coaches are about. You get there so much faster to the money.
Yeah. And again, I tip my hat to people like yourself that are coaches. I suck at coaching. I'm not a good coach. I don't have the patience for it. That's why we do the actual done for you services. So it's just like, here, it's done. You can't screw it up because we did it for you, right? So that's kind of the way we do it. But anyhow, getting back to the point there about the slideshow presentation. So you're talking about how people just kind of come up to you at meetings and they're on. Well, imagine that you are already a real estate expert, and it's still in one ear out the other, and it's hard to. But imagine this: when we're focusing on these people as our prospective investors, most of them are not real estate weirdos like us. And I say that with love and affection, because we are real estate weirdos. You know that when you talk to civilians out there who aren't into real estate, we start blathering about, ARVs and our strategy in the market and what's going on, and their eyes is glazed back. They don't care, right? That is who most of our investors are going to be.
Yeah.
They are not real estate weirdos like us. So when you just kind of go out there and blather about stuff, it's going to confuse the heck out of them. And a confused mind says, no, thank you. Versus if you've got a well-designed slideshow presentation that you can walk them through and show them Reader's Digest level, right? That's really what they want to know. Then that allows them to make an educated decision as to whether your deal makes sense for them or not.
I love that. Yes. So you're going to help then put this presentation together so you can actually talk to people about
online, one-on-one, or what's really, this kind of advanced strategy. But exactly what we're doing here today, LeAnn, is an online group presentation. That's really how you leverage.
Sure.
Yeah. It all starts with, let's start with that target group of people. Let's reconnect with them on a personal level first. Then let's have that slide deck ready to go for people when they put up their hand. Because again, that's my whole goal for people, is to have investors reaching out to them.
Yes.
Saying, I'm interested, putting up their hand saying, I'm interested. Tell me more about your deal. Because that conversation, this from your years in business, LeAnn, that conversation is a complete 180 from us chasing after somebody, trying to convince them to listen to us.
Yes.
Right?
Oh, complete 180. And there's relief. I have to talk about on the other side of that. When someone finally says yes, and you get that appointment for the presentation, if you don't have one ready, that's a panic situation. And
that's why it's step 2 of the 5-step process. That's
right.
Before we even start doing the marketing, let's make sure we're ready to go for when people do put up their hands, so we don't make a mess.
And then when especially if you can talk their language, not yours, that's what I heard. We have to, they're worried about their return on investment. That's what they care about.
Well, you know what? Everybody's different. Everybody's differently. And so, that's what we care about. Yeah. Now everybody should care about that. However, a lot of civilians out there, they're accustomed to getting nothing for.
Yeah, that's true.
They got their money in the bank. They got their money in mutual funds. They got their money in treasury bonds or GICs or whatever, making less than inflation. So actually, we have to be careful because if we show them, here's the weird thing: if we show them what the true profit potential is on some of our deals, it'll freak them out, it'll scare them away, and it'll be too good to be true. So what we need to do is, like you said, talk to them, in their language, but their language might well be around security. How do I know that my money is secure?
Yes.
What's backing this? How do I know that it's not going to disappear? How do I know you're not going to disappear with my money? All of these kind of things might be more important for the other person. That's why it's important that you have all of that in your presentation.
Okay, so now what's step 3? We have a presentation. They reached out. I give them.
Well, then maybe they have, maybe they haven't, but at least we're ready for them when they do. So step 3 is, let's get them to start reaching out. And you and I both know this from our years in business, then that's all about the marketing, right? What I call the constant, consistent communication.
Oh yeah. Oh yeah.
So just like you do so beautifully, you inject your own personality into everything. You make it fun. You make it edutaining. Same idea for our marketing, right? We got to remember, most of the people that are going to be getting it are not real estate weirdos like us. They're normal human beings who are into their own weird stuff, but real estate isn't one of it. So the biggest mistake I see people make in the end is they try to over educate people about real estate investing. They try to ram too much information. They try to be that fire hose. They try to come across as Encyclopedia Brown, so to speak, right? They know everything. So the other person doesn't want to learn everything. The other person wants to know that you know what the heck you're talking about. They want to maybe get the gist of it, the Reader's Digest condensed version of it, but they don't want to get too deep into the weeds. So we got to keep it light. We got to keep it short. We got to keep it kind of fun. We kind of got to inject our personality into that. So that's all about that ongoing, constant, consistent communication, the marketing. And that all starts with a website. I always recommend to our clients, you need to have a website specific for communicating with your investors, a website that's different from whatever the heck else you're doing. If you're, what are most of your people doing, LeAnn? What, buying a home?
Heck, they could be doctors, lawyers, restaurant owners, they could, they're business owners sometimes, or a lot of times it's the young millennials are really smart about investing, and they're doing the house hacking and getting started, but then all of a sudden they reach the brick wall of no more money.
Right, but they've got a particular strategy they're doing. They might have a website already for.
They might, because they might.
Or trying to attract tenants or something like that. You want to have a completely different website for communicating with your investors. 2 different groups of people, right? So that's the cornerstone, a good website. And then you want to have that constant communication. What do I mean by that?
A newsletter or something like that?
Yeah, start with at least one thing and get it going on a regular basis. On like if you got a newsletter, electronic newsletter, right? At least once a month, ding, whatever that is, the first Thursday or the last Thursday of the month, whatever, pick one, but make it consistent, always going out at that time. And then add a few more different marketing tactics as you go. Ideally, you should be getting to the point eventually, not right away, but eventually, where you're communicating with people on your list at least once a week or 4 times a month, right? Different things. Yeah, you can do more than that, but that's where you should get to. But you want to start with at least once a month. And a good idea there would be an electronic newsletter, or it could be a video log. I'm a big fan of video logs. They're very, very effective. Or blog posts or something like that. So you can do that on a constant, consistent basis. Does that make sense, LeAnn's?
It does. It does. Now I see Aaron. Hi, Aaron. He's got a question. He bought an auto repair shop and he's trying to buy the commercial property, and he can solicit investors to raise capital.
Right. Perfect, Aaron. Well, that's good. You're all set to go. So it sounds like you've already spoken to a lawyer, so you know how you need to set things up to structure your deal with your investor partners. But again, it all boils down to this, Aaron. In order for somebody to invest with you, chances are they're going to need to know you and like you and trust you with their money. So if you follow this process, I'm going to show you how to get that low hanging fruit, how to get the people, how to take care out of 2 out of those 3 things right off the get-go. We're going to be focusing on people who already know us and who already like us. And now the thing that we have to work on is that third thing, and that is the trust factor. Does that make sense? So that's what we really need to focus on. And that's part of this whole marketing thing. That's why, if you want to be doing this in a serious fashion, you want to have a website, you want to have this constant, consistent communication, you want to keep things going with that. So you're always top of mind. Now, Aaron, it kind of sounds like you're trying to look for a one-off thing. That's not what most people who are into real estate are doing. They're typically looking to raise capital consistently so they can grow their portfolio much beyond that. But this still applies to you, my friend. It's all about, let's create that target group of people, break the ice first before you try hitting them up for cash. Otherwise, it's going to go terribly wrong. And then then create a little bit of marketing so we can get people to put up their hand and focus on them and show them our presentation. In your case, show them why it makes sense for them to invest with you in your deal. Again, it's not all about, we know why you want to get into that property, but what's in it for the other person for getting into that deal with you. Yeah.
He's already in the property. He's a tenant. He wants to buy the building.
Oh, I understand that.
Yeah.
But so we understand why he wants to buy the building, but why the heck does an investor want to put in their money to help him buy the building? That's
right.
You always got to think about it from the other person's point of view. What's their security? What's in it for them? How long is their money going to be tied up? What kind of a return are they looking for? What happens if you get hit by a bus? All of these kind of things, right? You have to take into account. And a good, hats off to you. It looks like you already talked about this with a lawyer and you're set up so you can start raising capital. That's the first step. That's great. Now the next step is, how do you go about raising that money? And that's what we're talking about here.
Yeah, that's the know, like, trust is, I agree. I have a newsletter. I do a meeting once a month. I'm right on your ship, but it's exactly how come I'm known as an investment property realtor. I run a team of realtors like that because I've put it out there on a consistent basis, like you say.
Yeah,
totally. Now, we did step 1 and 2, and is that 3? Okay, what's 4?
Marketing is step 3. No, that's step 3. There's all about the marketing. So get something up, get it going out on a consistent basis. The more the merrier, but start with at least one thing and get it rolling first. Then step number 4 is all about demonstrating credibility, expertise, and authority. Demonstrating credibility, expertise, and authority in the eyes of your prospective investors. So, LeAnn, this is a big one that holds a lot of people up. They say, Dave, I'm not worthy. I'm not ready to start raising capital. I've only done 1 deal, or I've only done 2 deals, or some people say I've only done 15 deals. But there's other people in the club that I go to that have done hundreds of deals. How can I possibly compete against them? What rights do I have to put myself out as a real estate expert? Well, here's why, you guys. Because Dave said you can.
All righty.
I have anointed you as the real estate expert in your group of 200 people. All right. You are the king or the queen of real estate within that group of people. So here's the thing, and here's what you need to understand. If you've done even 1 deal, you are ahead of 95% of the general population. I can't remember exactly where I saw this stat, but it was from some mortgage insurer. And they done the research, and they said that 95% of the population has never purchased an investment property. Your own house doesn't count. Your own house doesn't count as investment property. So if you have even 1 property, 1 deal under your belt that you've been involved with, you're ahead of 95% of the civilian population that's probably in your list. So, LeAnn, it's been a long time for me, but I remember back when I was a little kid in kindergarten. Do you still remember kindergarten? You probably remember it pretty well. A little. Well, I remember. And I remember being in kindergarten, and the kids in grade 2 and grade 3, they seemed like gods to me. Like they were the big kids. Like they already knew, they didn't have to take a nap in the afternoon. They knew how to tie their shoes. They knew how to print their names. They knew how to do addition and subtraction and all the smart stuff that me as a kindergartner, I didn't have any idea. Well, it's the same idea. right? Even if you only have 1 or 2 deals under your belt, you're still way ahead of somebody who's never done any deals. So it's all about being seen in the eyes of your list of 200 people as a credible real estate professional. And there's a few different ways to do that. A couple of easy peasy ways to go get started with are, number one, to dress professionally. And I know this kind of sounds weird when we're in this whole Zoom environment, but even if you're meeting with somebody via Zoom, even if that somebody's your Aunt Hilda who changed your diapers back in the day, doesn't matter. Dress up, dress at least business casual, right? It's going to show the other person respect, and it's going to get you respect back from the other person. So that's a quick and easy tip right there. Other things, having a good slideshow presentation, that goes a long way. Having a good website, that goes a long way. And then be able to speak knowledgeably about your primary real estate investing strategy and your primary market that you're focused on. That's all you should be talking about. You got to remember, the other person's going to be easily confused. Don't try to explain too much. So you want to be able to explain succinctly and easily about your real estate investing strategy and the market that you invest in and why it makes sense as a good real estate market. So there's a couple of tips. There's other tips you can have out there. Get some professional headshots done. Realtors tend to be good at that, but the rest of us not so much. Go get some professional headshots done. Put those up on your website, on your PowerPoint presentation. Use them all over the place. Invest a few bucks in some really good business cards. And of course, I'm going to say this right now, and I might not have one handy.
You can't find it. What we're talking about is branding here, more or less. You have to brand yourself as an investor and claim it if you're going to ask for money, huge sums of money. Let's get real. You have to come across with worthiness. I love how you said that, because it is confidence and worthiness. And I love another thing you said. Talk about your strategy. Only that, because there's so many strategies in real estate. And if you get all off on the other one and you're doing fix and flip, stick with what you're doing for the money, whatever it is. That's really brilliant.
Here's the challenge I see, Leanna, and people like this, they do a whole bunch of different things, right? They do fix and flips. They might do some wholesaling. They might do a buy and hold here and there if it makes sense, yada, yada. They do all these different things. They got a smorgasbord of opportunities and experience levels. But here's the thing. When you're trying to explain that to a non-real estate person, it confuses them.
Oh, totally.
And then a confused mind says no, right? Second challenge is you come across as a jack of all trades, master of none, right? So you want to be, for people to feel comfortable about investing large sums of money with you, they probably want to see you as a specialist. Does that make sense? Doesn't mean that's all you can do, but it means that when it comes to raising capital, that's what your main focus should be.
Yes, absolutely.
Yeah.
Good so stuff. Is that step 4?
Step 4, where were we? We're talking about demonstrating your credibility and your authority. And then that that marketing goes a long way as well. So if people see that you're showing up in their email box on a regular basis, then you're not going to come across as flaky. You're not going to come across like a flash in the pan. We all know people who've got involved in something, made a big splash, and then fizzled out pretty quickly. Typically network marketers. And I can say that because I tried that myself, and I was one of the fizzle outers, right? So, so many people do that. They make a big splash, then fizzle out. So you don't want to be that person. Right? You want to make sure that you've got that consistency, because again, people are going to invest with you if they know you, if they like you, if they trust you. That consistency goes a long way to creating that trust. Good stuff. And then step number 5, this is really how you start creating that snowball, what I call the snowball effect. So Leanne, once you've got 1 or 2 investors under your belt, once you've got a couple of people working with you, and if you're getting them good results and they're happy about working with you, it's so much easier to grow your investor group through referrals and testimonials. So you want to get, because chances are the people that you've got on as your money partners know other people at a similar socioeconomic level, people with money, right? So if you do a good job for them and you encourage it, you can get really good testimonials and you can get really good warm referrals.
I love here what Dan says. It's kind of right on there. Can you see the chat box?
Yeah. So Dan says, seems inevitable an investor will ask, how many deals have you done? How does one counter this if you've only done a couple of deals? Won't this fact potentially harm your credibility? Good question, Dan. And it really depends on how you answer the question. It also depends on who the other person is. So Dan, I think you're thinking of this as if you were trying to get an investor partner from one of the other members of your local real estate club. In which case, that is going to be probably the first question that comes across their comes from them is, how many deals have you done? Okay, if you've only done 2, and they've done 27, well, you're at a disadvantage. Here's the thing, Dan. Most of the people that are going to be in your target group of prospective investors haven't done any deals, right? So even if you go and you don't have to lie or mislead anybody. If you've done 2 deals, you say, I've done 2 deals. And I use my own finances for those deals. And here's how they work. Here's the case study. And here's how they work along. And the reason I'm inviting other people to come on board to invest with me and share the profits is because I've hit the wall. All of my money is already in the deals I've got. And in order for me to grow my portfolio, I'm working with investor partners like yourself to grow the portfolio and to share the wealth. So it's a win-win. I get to grow. You get to grow along with me. You get to share in all the profits without having to do any of the work. So that's in a nutshell how that conversation goes. So don't BS about it, Dan. You don't have to. And you just have to be transparent and just show them, a case study of one of your deals or both of your deals if they're working along nicely, and why it makes so much sense for them to join forces with you.
That's such a great point that so many people did the one, the first deal is the hardest deal. Us investors know that first one. And when you have that first one done, that first flip, I was just talking on the phone today with a guy. I helped him on his first big project. And he's now a realtor. He went all the way around to the other side. But that one deal is plenty to show I made X profit. This is how long it took, all those details, like you said. That's credibility right there. And it was all his money, his cash. So now, like you said, all your cash is tied up in deals that are cash flowing and making you money, or did because you sold them. Then it's time, you only need 1 or 2 good deals and a lot. I love your 95% of the people they don't know anything.
Exactly. So again, another question that probably comes up even more often, Dan, might be somebody asking, if it's such a good deal, why aren't you putting your money into it? Right. So that's a question that might come up. And in which case, if you can say, hey, you know what, I would, except I've already got all of my money in the other deals I've got on the go. That's why I'm making this available to investor partners. You put in the money, I put in the work and the expertise. We share the profits. It's a win-win scenario.
I like that.
Yeah.
So by the time they got to step 4, that's the kind of conversations they can have, because like this 4 times a month communication, do you help the person with that too? Is that part of the done for you?
Yeah. When we're working with our VIP clients, we help them with all sorts of things, with newsletters, electronic video logs, hard copy newsletters, if that's the case, webinars, my goodness, seasonal greetings, updates, all sorts of different things. There's a ton of different things that you can do, blog posts, all sorts of things. So there's a variety of different ways that we actually help people do this.
So some people are really great contractors, but they aren't great at getting the money, or maybe they're good deal finders, or exactly. You have to stay in your wheelhouse is what I've found, and hire good people for the rest.
You're absolutely right, LeAnn. And that's one thing that took me a long time to learn, because I tend to be a driver or a type A personality. I like to think I'm smart. I like to think, hey, I can figure this out. Why do I need to spend any money on this kind of stuff? And it usually bites me hard on the butt. Usually, even if I figure it out and do it on my own, the opportunity cost just with the time involved with that kind of thing usually isn't worthwhile. So I've learned in my old age, LeAnn, it's not so much the what It's the who, right? Once we understand what it is that needs to get done, then it's a matter of figuring out who best to have do it. So, for example, you yourself, Leanne, you're a realtor, you're a real estate entrepreneur, you've been an investor, you understand the value of a power team. You are a big part of a lot of people's power team. You are
Yeah.
the realtor side of that equation. But there are so many professionals involved. So there's you as the realtor. There's the finance person, whether that's a mortgage broker or a bank person or whatever it is. The finance person, the person who's going to get the financing. Then you've got accountants and bookkeepers. You've got contractors. You might have property managers. You might have appraisers. You've got all of these different experts, professionals that are part of your power team, because if you're serious about real estate investing, you know that there are really three ways that you make money. And the three highest payoff activities for any serious real estate entrepreneur is, number one, taking care of business. Whatever your current portfolio is, taking care of that, making sure it's well maintained. Next thing is growing that portfolio, whatever that looks like for you. If that's finding the next flip deal, if that's getting into your next multifamily property, if that's getting into your next burr, it's actually doing the deals, getting those deals going. And then the third, once you're at the stage, so the third highest payoff activity for you is meeting with current and prospective investors. That's where the money is. Those three things, that's where the money is. Anything else that you can get off your plate and outsourced or delegated just creates so much more time and opportunity for you to focus on your core competencies. And that's what efficiency is all about. And that, at the end of the day, I don't think most of us got into real estate investing to create another full-time job for us.
No.
What happened to the whole passive income thing? Well, the passive part of things come once you're able to delegate and outsource the grunt work that you shouldn't be doing. So that's what that's all about.
It is so true, so true. Now, what's step number 5?
Well, step number 5 is all about that. It's all about, once you've got a couple of investors on board, how do we get referrals from those?
And testimonials and
testimonials. And the trick there, Leanne, there's a couple of tricks. For testimonials, I'll just give you guys a shortcut. You want to get a video testimonial. Video testimonials are gold. And the best time to get those video testimonials are right after your investor is really happy with you. That typically happens a few different times. When they first start up the deal, they tend to be quite excited, quite happy. When they get their first check from the deal, they tend to be quite happy and excited, or a nice quarterly check, or an unexpected bonus check, or something like that. And third, when you're cashing them out of the deal, of the successful deal, obviously, and they're happy and they've got a really good return on their money. Those are 3 really good times to approach somebody. What I like to do is I like to set up like a Zoom meeting like we're having right now, talking with my investor, going over things, and I record it. And then as we're talking, there's usually some good talking points there, and we get the testimonial there, and I ask them for their permission if I can use it as a video testimonial. Tends to work very well.
Okay, now I'm curious. I got some questions now. What methods do you use to screen these potential partners? Like you said, we attracted several, but now what?
Okay.
How do we screen these people to make sure we want to be partners with them? I take this really seriously because I tell people, when you're picking a partner, you better feel comfortable practically married to them. Just know.
Yeah. And you know what? It's even more important. Well, it's important all over, but it's very important when you're dealing with people that are either your family members, close friends, business associates. You already have that relationship. And if you screw things up, it can be uncomfortable on numerous levels, including personally, right? So it's very important that you set everything up right from the get-go. So just like Aaron was talking about, having everything set up right legally, so you've got the right structure. However, if it's going to be through a corporation, or if it's a 506B or 506C exemption, or all these different techie things that your real estate lawyer can help you out with, you want to make sure that even if you're working with a friend or a family member, you treat them as if you were working with a stranger, right? So you set up the appropriate structure. You've got the appropriate joint venture agreement or contract. They get their own appropriate independent legal advice. You've got regular reporting scheduled. You treat it as if they were a stranger. What would a stranger be looking for, and how would you deal with that? So even though they're not a stranger, you treat it as a professional relationship. So that goes a long way. But to get back to your question, LeAnn, how do we decide if we want to work with this person or not? Well, you're going to get the feel of it. Well, first of all, you already know them, right? They're already on your list. So theoretically, you already have this pre-existing relationship. You're going to get a kind of feel for them as you're doing your presentation, the kind of questions they're going to be asking, that sort of thing. And we got to remember, the purpose of the presentation, people, is not to get them to cut you a check for $50,000, $75,000, or $100,000. That's not the immediate purpose of the presentation. The purpose of the presentation, in my mind, is to get them to put up their hand and say, you know what? Yes, I'm in. When you've got a deal, I want first dibs. Right?
Exactly.
And then what I say there, LeAnn, is, let's say that was you. Say, that's great, LeAnn. Here's what we're going to do. I'm going to have you just sign off on a very simple expression of interest. And that's all it is. This is not a legally binding document. It's just a very simple document saying that you're interested in investing up to X amount of dollars in a real estate deal for a certain amount of time, just so that I know that you're serious about it. So when I do find a really good deal, you're going to be one of the people that gets first dibs. So the goal here, LeAnn, is to get a group of those people. Let's say we get 3 or 4 or 5 of them lined up, ready to go in the wings.
Uh-oh, we have a frozen Dave.
First come, first serve.
Okay.
Here's the deal. When you put it, if you get back to me right away and you're serious about it, you get first dibs. Or maybe you need a couple of investors on there. We've got room for 2 investors on this deal. So that's how you get started with that.
I love that. Exactly. And now they're ready and waiting, and then you go shopping.
Get the money first, then
That's
go
right.
find the deal. Right? Exactly.
Okay. And one more thing then I want to know from you, so now you obviously raised a lot of money this way. That's why you're an expert on this. And this is what worked for you finally after you fell on your face, right?
Thanks for reminding me. Yeah, exactly. After failing miserably, I came up with this process by hook and by crook. Yeah. Thankfully, it didn't just work for me, but at this point, it's worked for hundreds, if not thousands. Well, I definitely know of hundreds of people because we've worked with hundreds of people in our marketing agency, but I've taught thousands of people about this from across North America, all over the States, all the way down to Australia. We got clients and students in Australia and the UK and the United States and Canada, all over the place. It's worked really, really well because think about it, folks. It's actually just common sense, right?
Yeah.
We're going after the low hanging fruit. What I'm showing you is a formula, is a framework for doing that in a systematic, consistent way. That's the big difference. Instead of it being hodgepodge, hit and miss, this is a way to do it consistently.
That's really great. Aaron, I see you want a copy of the book. When I end this, I'm going to put up how you can get a copy of the book. One more thing, though,
Here's a shortcut, Aaron, if you can read that.
Oh, if you can read that. Yeah, there you go. InvestorAttractionBook.com. I can read it. Yes, you can get a PDF copy of Dave's book. Also, you can go ahead and tell us about, you have a seminar coming up, a one-day workshop, virtual, correct?
I do. So what we do, LeAnn, is we do, pre-COVID, I used to traipse around God's green earth and do live presentations at wonderful clubs like yours, and then come back to town a few weeks later and do a live workshop. That all changed, and actually changed for the better in a lot of ways, because now we do one-day virtual workshops. We're able to keep the price very, very reasonable. And the method to my madness is, instead of trying to sell people on a home study course on how to do stuff, I give them the training in this full 8-hour workshop, and then we offer them easy button, done for you services. So if people are interested in doing that, that's how we bring clients on board. That's why they keep the ticket prices very, very affordable. And during the 8 hours, it is a full on workshop. I mean, I don't hold stuff back. I give you the full goods. I mean, today we didn't have time, obviously. It takes a full 8 hours, but I gave you the big picture of how the whole thing works. But in the workshop, we actually dig into the weeds, get into the details, and show you how step by step to do these 5 steps. So yeah, we do those
really
on
great. Now, so you have one coming up.
We do have one coming up. Yeah. Is it okay if I let people know how to?
Yes. Or because this is a replay and it'll go all over, is there a website they go to, or where can they find that?
Yeah. So I don't have it quite set up for you, but I would like to set one up specifically for you, LeAnn. If
I'll put it in my replay link. We'll do that, a special one, but I saw there's one coming like next week or something.
Yeah, we do them on a fairly regular basis, once or twice a month. So depending on when you're watching this, I'll have a specific link set up for
perfect.
Friends of LeAnn. I'll give you guys an even better deal for coming because you're friends of LeAnn's as well.
Great. I'm excited about that. So that's perfect for these do-it-yourselfers, but I bet you lots of people get to the end and they just push the easy button because it makes a lot of sense. Especially when what we're talking about here is big money. We're not, to attract someone, be it grandma or whoever, but in a professional way where grandma feels safe working with you to help you, they feel like proud of you, I'm sure, then there's a lot of real estate available if you have the money. And you can make money on that money way better than wherever they have that money right now.
Well, LeAnn, here's my opinion. And if people only come away with one thing from our time here today, here's what I hope they understand. You are doing the other person a disservice if you don't let them know about what you're up to with real estate investing, because a good real estate deal is the absolute best way for everyday folks like you, like myself, like our investor partners, to get an above average return on our money backed by a solid, tangible asset. And we're talking about real property here. We're talking about shelter for people, shelter for businesses. This is not going away. Everybody, it doesn't matter what's going on with the economy, everybody needs a roof over their head. And all of the other investment options out there that average everyday Joe public has are pitiful compared to a good real estate deal. I mean, what other kind of investment is there out there that we can exercise this much control over? What other kind of investments are there out there where there's, depending on how you count them and what you're doing, up to 8 different ways to profit from one deal? There aren't any. So it's not just about me, what I want to grow my portfolio. It's what do I bring to the table for my investor partners to help them grow too? How do I help them achieve their financial goals doing something they cannot or will not do on their own? So
exactly.
So I sound like a preacher there when I'm talking about that, but I'm very passionate about that. I think it's our duty to educate people about what we're up to with real estate and allow them to make their own educated decision as to whether they want to invest with us or not, right? Without pressuring them, without having to do salesy, manipulative BS, without having to always be closing and any of that BS you watched on movies. It's all about educating people, showing them what you've got, and allowing them to make an educated decision.
Absolutely. And I'm sure in your longer workshop, you get into different things about, how do you be sure you're following the rules of the private funding and,
Actually, I don't, LeAnn. I don't get into that because, again, my caveat is I'm not
an attorney,
lawyer. I'm not an attorney, and everyone is different. And really, there's so many varieties. So, I mean, you folks in the States, you got the Securities and Exchange Commission, plus you've got your local state authority as well. So you need to talk with a real estate lawyer to see how best to structure it for you. It's going to depend on whether you're bringing on people as purely equity partners or pure debt partners, or if they're going to come on board and they're going to help you qualify for the financing. All of those nuances are different. So it would take, first of all, I don't know all those nuances. And second of all, it would take weeks to teach that for everybody, for every potential.
Especially, okay, so that's great that we got clarity on that. You are about how we're going to find these people, how we're going to set it up. That's a whole nother ordeal.
That's a whole other situation. It doesn't need to be an ordeal. It's usually quite simple but it does require you talking with a specialized expert, a lawyer, a real estate lawyer in your area.
Right, in the area you're purchasing real estate, absolutely, because it's different everywhere.
What I'm going to show you how to do is how to get that low-hanging fruit, how to get those easy investors first. In fact, typically, that's why I say our ideal target client is a mom and pop real estate investor just getting started with raising capital. They've got a little bit of experience with doing deals, but they don't have much experience with raising capital, and they're ready to go that direction. We're going to be able to help you get your first 2, 3, 4, maybe 5 investors on board, raise your first 100, 300, maybe even up to $1 million in investor capital. And once you get that going, then you're going to be ready to take the next step into getting into bigger deals and perhaps syndications and things like that.
Okay, I have one last question. The average Joe who comes to you, how long does it take then before they can raise some money?
That's an awesome question, LeAnn, and you're going to hate the answer because it depends.
Oh yeah.
And here's the thing. We have because one of the things that I teach in this whole second step there, which is create your investor presentation, which I call your $1 million investor presentation, is we teach a cool little strategy I call the ninja tactic for getting some practice presentations under your belt, some friendly ones under your belt. You can get 3, 4, maybe 5 of those done where it's no pressure on the other person, no pressure on you. And they're designed to be practice runs, but if you do it right, you're probably going to raise capital directly from that. So that can happen in as short as a week or two. That can happen very, very quickly. When we do the whole marketing thing, if you start getting into doing online group presentations, that can really kick things up very, very quickly. But the process that I take people through in that one-day workshop we were talking about is starting from scratch. How can you raise, how can you get your first or next investors and start raising capital in the next 4, 5, maybe 6 weeks? That's the time frame we're really looking for there.
That's doable. Okay,
completely doable.
That's pretty good. Okay, great. We're at the top of the hour here, so I have to finish it up, and I just want to end and say, everybody, thank you so much for coming. And I know lots of people know that I send these out to my list when we're done. And I even got a couple emails, oh no, I can't make today's presentation. But they don't have to worry. And I also want to say, if you are looking for some help, either to get started with a strategy real estate investing, or you need some help in the Minneapolis market to purchase property, then go ahead and go to LeAnnRiley.com, and that would be my website, and you can book a strategy session. And now I'm going to put up, and if Abby or Jeannie could put it in the chat box for those, I'm sharing with you a screen here that has Dave's information here to get the book.
Can't see the screen yet.
Leanne. Okay, it's coming.
Oh, there we go.
Well, it's I didn't get the whole screen up, but can you see it?
Yep.
Right there. So you are going to go, oh, that's not it. That's the wrong slide. There.
There we go.
The free money partner formula book you go to, I'll say it out loud for Facebookies. It's investorattractionbook.com. So you can get the money partner formula book in a PDF. So check that out. It's also a regular paperback book, is it not?
It is. We only have it available right now as a PDF. I haven't gone into production because we just added some new stuff to it. So it's now it's available as a PDF.
Great. Thank you so much, Dave, for joining us today. It's been great to hear, it's interesting that it's just marketing yourself as the expert that you are even if you've only done one real estate deal, you know a lot more than everybody else. That money is available and deals are available all the time. So thanks for sharing your formula.
My pleasure. Thank you,
All
Leanne.
right. We'll
Bye
be
on.
talking soon.